Hello, and thanks for tuning in to our yearly roundup, not a weekly roundup, of blockchain games. I'm Jenny Jordan. You are John Jordan. Hello, John. How are you doing?
Father Christmas to you.
Father Christmas to me.
He's
got many names, they say. It's Friday, 19th of December, so we're doing it on a Friday. Still sticking to our tradition. We're very glad that you could join us. So how are we going to structure this? So we're going to start with the kind of the ugly, and then the bad and the good, just to end on a good note.
That's not very Christmassy. The Western, the Christmas, it must be a Christmas Western where the shootout happens on Christmas Day. I'm sure. ChatGPT it. Anyway.
Well, we will see if we start talking about the state of things, what the ending is actually going to be realistic.
Cry into our beer by the end.
Yeah.
Cry into our Christmas or mulled wine by the end. No, we're going to be upbeat and positive.
Yeah. Good. Right, so let's start by just giving an overview kind of general crypto in 2025, because that obviously to some extent influences the state of games as well. Or does it?
Yes. No, and I think sort of particularly this year, I think in previous years, obviously we're focused on games, and there's sort of been enough going on in games to sort of there's been enough significant trends in games, positive trends maybe, so to just focus on what's going on in games. We don't need to worry or focus too much on what's going on in general crypto, because there's just been a lot going on with games. If we're doing a podcast covering crypto and games, it would go on for hours and hours and hours normally. I mean, this one might go on for hours and hours and hours, but it's not. But I think this year, partly because of what we're going to discuss of sort of what happened in games, sort of the end. It was I guess for games, it was sort of the end of the cycle that sort of the start of the Axie cycle, the play to earn cycle, the funding cycle that started in like 2021 really, and this is the end of that cycle for games, because that the concept people had then and what worked for a brief time at least in terms of actually working. That narrative has played out now. So basically, what we see going forward is people who have, worked on that narrative and actually, seen in the long term, in terms of years rather than, or certainly months, in terms of what works, in terms of just what works in terms of weeks and stuff. So we'll get more into that. That narrative is sort of like play to earn and tokens and incentivized actions and what sort of play to earn is, isn't it? So that narrative in games has sort of ended, and that's why we've seen sort of such a brutal year really. Because basically everyone's run out of money. A lot of money was raised then, and in some way, well, I won't go into all that, but we'll discuss that later. But everyone's run out of money. The vast majority of people, which is why it's been a terrible year for stuff shutting down. That was the narrative for games, but for general crypto, the narrative is now very different. So obviously, for general crypto, which is sort of particularly focused on what's happening in the US, that the Biden administration was very anti-crypto. And then basically in every opportunity it had to, sort of stop the rise of crypto, it pretty much did that. I mean, mainly the SEC and Gensler, but that wasn't the only sort of situation. Whereas now, obviously, you now have the President of the United States launching crypto products here, there, and everywhere. Donald Trump has made more money Donald Trump has never made more money in a faster period of time than in the last year because of crypto. Whether I don't know how much he understands it himself. Obviously, at certain points he said rude things about Bitcoin in his first administration. But obviously, his sons seem to be into crypto from a deep philosophical basis, or from we can make money from this. Probably a little bit of the two, I think. So that's why crypto in general has sort of it's been working over the sort of last few years on lots of sort of interesting infrastructure things that it couldn't sort of actually deliver, not because technically it couldn't deliver them, but because the SEC would basically sue the pants off you, if you tried to do any of that sort of stuff. And there was no regulatory certainty about how you could do even very boring things. And clearly now, the Genius Act about the stablecoins is a massive big thing that there is legal certainty around stablecoins.
They've now shut down, and we'll get on to that later, sort of the trend of that. They've sort of quoted that the lack of regulations and regulatory clarity is a main reason or a really big reason why they struggled? Do you think that is just a bad excuse, or is that actually true?
No, it's nothing to do with what they were trying to do. I mean, it's definitely true that the SEC was going after Immutable and Flow and various other I can't remember, a few other games that it was sort of going up, even quite small projects. So from that point of view, there is some element of truth there, but the fact that those models economically haven't worked is I don't think anything to do with the legality of those models. I think psychologically they have, those games have not been offering enough reward for people to put money into it. At the end of the day, you strip away any business and basically you offer a product or a service and you charge either people directly for that, or you monetize people's activity, from advertising from other people who want a part of their attention. But you have to provide a good or a service that people are prepared to either spend money on or spend a lot of time on and look at adverts, basically. I mean, those are the two ways of doing it. So the fact you're doing it in crypto doesn't, there is an interesting thing there where you make your own internet money, magic internet money, and if you can get that internet money to be worth something, you've basically invented some money. So there is a slight there is an extra sort of thing in there. But what we've seen over the last, certainly last year, is the ability to make internet money valuable has basically imploded. So that's really has focused blockchain games companies on the foundational tenets that every business makes. You either have to offer a good or a service that people are prepared to pay with time or money, and that's, we'll get onto how the games that are left have sort of changed their focus. But that's I was going to talk more about stablecoins. I want to talk about stablecoins.
Well, that's interesting because maybe that's sort of the good at the end will be sort of future predictions, which we can get onto how these games are making it potentially work more sustainably in the future, and why other sort of games, why that may be the kind of blockchain adoption that we see more mainstream.
Yeah.
But yeah, let's talk about. It's interesting you mentioned sort of incentives there, because clearly the whole crypto, if you're talking outside of games as well, the sentiment is very much it has to be incentives based games, Web2 games. That's that's a fundamental sort of psychology behind why they are successful and why players keep coming back, isn't it? So, but Web3 games, why has it not worked? Why is crypto incentives not worked? Web3 games.
Yeah, I mean, so the games industry is $200 billion, give or take, a year annually. So it's quite a large sum of money. And people pay that because, one, they enjoy the experience of being in whatever game it is. It's obviously that's, a different experience from reality. So, some people, lean into that more than others. Obviously in COVID, when people were sort of depressed, games were a way of sort of, getting out of reality and into sort of a situation where you have more control. And that's an interesting thing about games is maybe as people feel, I think people generally feel life gets more complicated as it does constantly. Then you feel like there's more going on. You have less control over it. So like an environment where games are designed for you to win, basically. I mean, not win everything all the time, but games are designed to have challenges that you can overcome with sort of skill or perhaps by paying money. But people just like that. I mean, I think it's a fundamental. I mean, it's like what's his name, Maslow need or something, for us to feel we have control over our environment. And as our environment becomes incredibly complicated now, I think it's a fundamental thing that games will become more important for games. But obviously, as part of that, that's sort of an individual thing. People like to show, to themselves they have skill and learning again. That's always a nice thing about a sort of the more simple games I played when I was younger. You sort of you got better in the game, say Doom, you got better guns, you were fighting bigger monsters, but you got better at just moving in the game. And obviously as you played the levels over and over again, you knew where to move in the level. But then there's games become multiplayer, and then you get to prove your status against other people. You get to be on a leaderboard, or you level up, or you're part of a guild, or all this sort of stuff. And obviously, at some level, someone is the best FIFA, or not FIFA player anymore, FC 2026 player, or the best League of Legends player, as Elon Musk got his game boosted, so he'd be in the top 10 of League of Legends. Why did he do that? Well, he wanted to show off status like people do in real world with money. So games are sort of important for that as well. And I think that's quite complicated enough. I mean, those sort of needs that people have in Web 2 games are quite complex, and the game has to be good as well. And if there's a hot new game, that really fires up our sort of dopamine. Oh, it's a new game, and everyone wants to be quick into the new game. So you have that sort of thing as well. Everyone wants to get into that. So there's quite a lot of complex psychology and entertainment and enjoyment around games. I think the problem with blockchain games is if you put because they are financialized, I don't think that's a bad thing. I think that's sort of how what we're seeing in sort of life anyway. We'll get onto prediction markets maybe. But if you put financialization in there as well, that's such a strong sort of driver for what we do that overwhelms everything else. So obviously, it sort of depends, as we sort of discussed before, if I can earn $10 in a game, that's, thankfully not a large sum of money for me. So if I enjoy the game, I will do it. If I think the game's rubbish, or I don't, I'm going to play it for 20 hours to get $10. I mean, I'm not interested in that. Obviously, other people in the world, $10 is a very significant sum, and they'll basically drop everything to do that. This is what Axie Infinity for those months where people could earn their salary just by playing the game. And I just kind of think, a lot of people who got into blockchain obviously weren't from the games industry and never made a game before, and just the complexity of how you were going to do that. I mean, this is what people have been struggling with, let's say, for this arc since Axie Infinity to now. When we talk about these products and what people are looking to do now I think financialization has to be in there, and it has to be rewards in blockchain games, because they are fully everything in a blockchain game. Not everything, but there will be value. There will be financial value embedded in a blockchain game. How you position that within these other needs of enjoyment and challenge and flex against other people and co-op with other people, and that's really complicated, and no one has worked out what that template is. And I guess that's going to take a long time, and it's actually going to be very product specific about how you, a fully on-chain game has everything on-chain, so that's, in a sense, has more complicated because the value is everywhere. Whereas a game where you just say have an NFT or a token, that's still complicated to build that financialization into the enjoyment. But there's a sort of a smaller surface area on that one. So I think that's, that's almost been, everyone loves games, and that's why we thought, and games often, any new technology, people make games on it. And that's what happened with blockchain games, massive explosion, thousands and thousands of games made. But actually, what we've realized is it's sort of like it's not double the complexity. It's like, power law. It's squared of the complexity, because you've got financialization in a sort of emotional model. And obviously everyone leaned into financialization when that worked, and you could drive millions of players very quickly into a game for that reason. But you couldn't hold them. And then particularly the biggest thing for blockchain games is people are prepared to spend money on Web 2 games because they just know it's enjoyment. It's very simple. Do I buy this? Do I buy some gems in this game to speed up? Do I pay the subscription? Do I just buy the game for a premium game? That's a pretty straightforward narrative. With a blockchain game, it's sort of, if I spend $100 and I see next month my game account is only worth $50, that's a sort of, in a weird way, that's a different motivation than I spent $100 in a game that doesn't have any value in it, and I know when I spend it that I've spent that money, I'm never going to get it back in. Yeah. It's almost like because
the expectation that you might potentially make some money, and then seeing that you don't, or that you even lose some money, or that you
exactly. And I've sort of funny. I mean, I've said this a few times, not recently, but you sort of come back to maybe your sort of head was purer in the early days, and I would always say the killer feature of blockchain games wasn't that you could make money, because most people wouldn't make money, because that's not how economics works. But the sort of killer value of blockchain games is you might spend $100 and be able to sell your stuff for $50. and because I mean, you don't have to agree with this, because I'm very weird psychologically.
I agree with that. Yeah.
But around these sort of things, for me, that was the killer. That was the killer thing, that I could spend money and get some money out of it. That was like, wow, that's because you can't do that unless you're on a grey market selling your account or something in Web2 games. So for me, that was sort of quite exciting. But clearly, I'm in a very small minority of most people who just think I lost $50. And as you see it going down next month, $10, you're just like, oh, never played this. This is a terrible game, because you don't want to look at your bank account and see it's gone down. As ever, I am not a good judge for which to scale up a business on the mass market. I'm not that person. Anyway,
so we just mentioned sort of the lack of regulatory clarity was one. I wouldn't say excuse, but it was one reason.
I'd say a minor reason.
Some developers did claim that was a big reason. And so then also sort of incentivized rewards and bots coming in and sort of completely taking over some of these games, making it unsustainable. Yep. And then we have tokens, obviously, the sort of elephant in the room, really. What would you say in regards to developers that say we kind of lost control of it by the time we launched the token, and we never that they could have never expected really the kind of cycles that came from launching the token and how that would kill the game, and that's an excuse as well. Not excuse. That's
the key learning. When we sort of knew this last year. Last year was a bit of a weird year. That at the start of the year, people did launch tokens, and we did see that sort of 10x thing into 2024. For it's actually, again, like all these things, you think it's a longer trend. It was actually only really for maybe 2 months that people were doing these sort of pre-sales, and the KOLs were sort of getting in early, putting like 50 grand in, getting 100 grand out, and the tokens were actually still going up after launch. But as ever, in any sort of dynamic system, you reach equilibrium very quickly. So people sort of work out, the early people get in and make a big risk, and if that works out, they do really well. And then everyone sees this is the model. So instead of like the first 2 coins do it and work really well, and then you've got 20 coins launching, and obviously there's equilibrium. There's it sort of falls apart quite quickly. And the biggest issue, I think we've seen this, and obviously we've mentioned app tokens a lot, and that's that's come from Gabe Leiden and Limit Break. So he's done all the sort of thinking on that. I've not done the deep thinking on that. I'm just sort of reading his stuff and going, seems totally right. But his argument is, as soon as you put a token on a centralized exchange, so Binance, Coinbase, doesn't really matter. But as soon as you allow people who have no, so in terms of games, as soon as you allow people who are not playing your game to get access to your token is basically out of your control. And your token is then driven by, general market sentiment or specific sort of sector sentiment. Interestingly, in this year, Bitcoin will probably come up a bit down this year, but it was been up the last 2 years over 100%. So, so the narrative around crypto, I think has been really positive this year. So it's been all, as we've discussed, all the laws are sort of set in place. Stable coins are like everywhere, like Stripe's doing stable coins, PayPal's done stable coins, Sony's announced a stable coin. Everyone's doing stable coins. Stable coins are just there now. Visa and MasterCard are like super worried that their business is going to disappear because stablecoins are basically going to undercut them. So that sort of stuff is there. And I've totally lost my going with that. Tokens. Yeah. So we now have this payment system that you don't need your own sort of magic internet money. So all the game people just basically invent money, and it's a bit like that's where meme coins were. Basically every IP can every creator can create a meme coin and and just magically make money. Well, no, as I said before, the first people to do it, because they've invented something new, that's novel and that will hold its value to some degree. But progressively, we've seen with Pump Fun, how many tens of thousands of coins have been created there, and the biggest one is Pump Fun. The coin Pump Fun takes all the value from that, and even that's not done very well as a coin. So it just, and I think for some other bigger sort if you're launching an L1 blockchain, even most of those have failed. But you can sort of make an argument. We're doing something different. I mean, it becomes quite hard. But, Ethereum does it, and then so Solana's like, oh, we're doing it different to Ethereum, and then you get all the L2s and stuff. But over time, you get, it becomes harder and harder and harder to create value in those sort of things. And for games, these things are just tiny. They're tiny little products created from a few people, and a token works really well when either you're tokenizing an existing sort of revenue or business stream. So you already know people are spending money, and to some degree, you're then bringing tokens into that existing financial model. If you're trying to launch a business from scratch and also over financializing by letting people who are not involved in those business flows basically gamble.
You're trying to invent the utility at the same time,
So you're trying to invent a business at the same time as allowing gamblers to bet on whether your business is going to go up or not.
Yeah.
There's two totally orthogonal things going on there. And so Gabe Leiden was exactly, and it's not just that he's realised this. I mean, probably lots of people realise that before me. But they've built an entire system, an entire two protocols. One's an NFT protocol, one's a token protocol, that basically puts guardrails or puts restrictions on how these tokens can be used. So you can design a token that's fully on chain, but can't be. In particular, say it can't be sold. So people can't extract. You can have a token that can only be used in the game as currency. It can't be extracted. And that's not because it's not on an exchange. It's because it can't be extracted because of the code. So the problem is he's come up with this stuff. It's taken him a long time. You have to really get your head around how it works. I mean, I'm not a coder, so I haven't. I mean, maybe AI will help people on this sort of side of things. But that framework is now there, and it's for people to build on it. But because it's really complicated, you could just use it in an out-of-the-box type way, but it seems to me that you have to actually think quite seriously about how you're using what the flexibility app tokens gives you and your game design. So you're sort of almost starting from scratch on that. So obviously we're not going to really see that stuff happening until 2026. We've seen people playing around with that sort of stuff. But I think even if you take away app tokens, the fundamental model is if you put your token on an exchange, your token is going to basically fail. And that's what we've seen. Token there are a few tokens that have been launched in 2025 that have gone up, but they were launched a few months ago. Any token that was live at the start of 2025 has gone down.
Right. So which ones a few are up, you say?
Well, a few tokens that launched in 2026. There's a few tokens that launched like the power token launched like last week. So that's sort of up, but it's like, it's been live for like a month.
And in terms of the number of tokens launched, that's decreased, I assume, towards the end of the 2025.
I haven't really followed that anymore, but yes. So compared to 2024, had a lot of people launching, and because a lot of these projects have they've sold their token, they've pre-sold their token into people, and then they're sort of waiting. They've been waiting for the right time to launch.
Yeah.
So you had this sort of like, oh, tokens are hot now, and everyone's like, and of course a lot of them they want to go to exchanges. They want their token to be liquid, even though they have to pay loads of money to the exchange to get listed on the token. It's almost like you're paying someone to take you to the guillotine and chop your head off. I mean, it's absolutely potting. And because particularly now the narrative around it has been, well, the team's not selling any tokens. Now, obviously, there has been sort of runs and stuff around that, but you sort of ended up, you're paying someone to take you to the guillotine, and you've tied your hands behind your back. So the team can't even sell it. Anyway, I won't get into all that. So that narrative is just like basically totally gone now. And I think that's a really good thing because we've understood now. I think at least at first level how not to launch a token. I'm not sure we really know how to launch a token yet. People are sort of getting towards that, and I think clearly just because you can hold crypto and you can hold a stable coin in a PayPal wallet. So lots of people have PayPal wallets, and if you hold their stable coin, you can earn interest on it. Obviously, you see that in Coinbase. If you have USDC, you can earn interest in it, and it's just that people are just getting used to that sort of stuff. And Coinbase did a big announcement yesterday that in their app you could be able to do prediction markets and tokenized stocks. So it's becoming a bit more like Robinhood, and Robinhood you can own crypto, similar sort of thing. So we're just seeing the sort of the very. I mean, it's very significant stuff, but the sort of not game specific and sort of somewhat boring. That stuff is really getting embedded into what we would have called the traditional sort of finance sector. And I guess the biggest example there is Stripe. So Stripe's super well known for basically allowing a very simple access to payment systems. It does trillions of dollars of revenue, and they have been a bit sniffy about crypto. But now they're creating their own L1 blockchain and they're running their own stablecoin on there. Clara, another one, obviously very well-known sort of Swedish finance company, their CEO was very anti-crypto. They're launching a stablecoin and they're using the Stripe blockchain. So basically, we'll really see, I guess, whether something like blockchain payments in not Bitcoin as they originally thought, but stablecoins, do they eat the world? Does everyone just go, I hold a stablecoin, I get the interest on it, it's in dollars? Most people in the world, if you had said to them, do you want to swap $100 worth of your local currency for US dollars? They'd bite your hand off. I mean, they'd give you $100 of their local thing for like $90 of dollars. So if you're offering like a one-to-one thing, some people are saying this is going to be like a massive dollarization of the world, where everyone in the world now with a smartphone can basically get dollars.
So it sounds like you're kind of advisory hat on this one, imaginary.
Oh yeah, this is about the significance of my advisory hat.
But that there's no point really in launching your own token. Why don't you just tune into stable coins that are already there? Or perhaps work out a model using app tokens. But if you were to advise like a new free game developer.
Yeah, I think you're right. And I think, we are already seeing, so it's only announced this week and it's not entirely clear, but Mythical Games, which has its own Myth token, which like everything else, it's down 90% this year. And obviously if you're selling NFTs on the Mythical marketplace, you basically sell them, you put the price in Myth, so put 100 Myth at the start of the year. And unless if I haven't taken that off, my NFT is still listed at 100 Myth. But that is actually now, say it was worth $100. So I had a $100 NFT that I was selling. Now I'm going to get my 100 Myth if someone buys it, but it's only worth $10. So clearly that's a terrible user experience. I mean, awful. So it makes total sense to use stablecoins, and that's what they've said now. They're launching a new market called Pulse Market. We don't know if it's running on their Polkadot infrastructure. The details are not very clear, but they're using the Blankos game. So that was the original game that they had on their original chain that they moved to Mythos, I think, start of this year. Now they're moving it off again, and they're going to run it on USDC. So literally, the Circle stablecoin is going to be what I'm going to sell this NFT for 10 USDC. So I know I'm getting 10 USDC. In the background, they may be using their own Mythos chain and using Myth in the background. But I think we've sort of understood now that most people are incredibly loss averse. That's just a psychological way our brains are wired, and we like certainty. So we want to know, I'm selling this for this price and I get this price, and this price isn't a magic money that's lost its value.
And particularly for Blankos NFTs, those are probably still the most valuable assets, Mythical.
I mean, valuable is doing a lot of heavy lifting there. I mean, I don't think, because that game stopped a long time ago, I don't know how that game will be restarted. But I would say it's the only, so Mythical, has done, Pudgy Penguins launched this year, FIFA Rivals, NFL Rivals, they're its main games. Those are all licensed games. So Mythical Games does not own those licenses. It pays the licensees to have access to those licenses. And say FIFA, I don't think it would happen because they've got long-term deals, but at some point, FIFA can say, you got to give us tons of money, and Mythical can say we can't afford it. And so that game would have to be called Mythical Rivals or something. But Blankos is something it created itself. So that probably means it has like an emotional heft within Mythical, and also it can be a lot more flexible in what it does. So I hope that's going to actually be a more Ethereum-based ecosystem, because I think it's Mythical. Those Mythical characters are brilliant, really well designed, and they could go in lots of games, or you could imagine some more crossover stuff happening there. But we don't know. But I just kind of think Mythical is, one of the big blockchain games companies, well-funded, very experienced. They really know what they're doing. They don't move the fastest, but I think they sort of get the right answer in the end. And it's interesting that they are, as a big company in that space, they've not actually publicly, it's kind of funny, they've not publicly announced it. They basically sent an email to people who have Blankos NFTs, which obviously I have far too many. So that's interesting. I kind of think when you start seeing people doing that, then that, other people go, oh, they're doing something. And if you're using stablecoins, you don't need to do this app token complexity, because stablecoins are just very basic, and you can do stuff with your own wallet, with your own token in the background. The problem they have is they have their own. Once you have your own token, it's quite hard to depreciate your own token and reissue people stablecoins. Because then you create your own money, you don't, even if the price is going down a lot, it's still your own money and you own a lot of the tokens. If you're using stablecoins, you have to go and buy the stablecoins, and you can't use your own magic money anymore. So you actually have to use your own dollars. So it's economically very different. So if I go back to the original question, I think it depends a little bit on the project. I still think there is an opportunity for people to, use their own magic internet money, because that does allow you to do certain things that you can't do otherwise, that would be sort of cost prohibitive. And if you don't put it on exchanges, you don't get the crazy ups and downs. You may get a sort of a solid down. So that may seem not like a great sort of example. But I think you just have you have a more stable system if you design it a certain way. Two very quick examples. Craftworld, the sort of idle game on Ronin, launched its coin, just called Coin, on Ronin this year. And again, this is not designed to be a coin that goes up in price. This is very much a utility token. Because more of it's produced over time, probably you expect the price to sort of go down. You don't want to go down like tons. But it's interesting, I play that game a lot and I don't look at the token price. Because it's a utility in the game. You have that token to buy other resources in the game. You're not supposed to sit there with like tons of it in your wallet, hoping it goes up. You're supposed to basically, it's a bit like you're in Zimbabwe. When you get your money, you spend it quickly straight away because the inflation is going to eat away at the value. Similar thing with like Soccerverse. Obviously, I advise they have their own token, and again, that is that's not even on exchanges. That you can only exchange that within the game. It's a very sort of interestingly designed token, but basically more of this token is produced all the time because everyone's getting paid. The players in the game are getting paid in it to the users. The clubs are getting it for getting promoted and blah, blah, blah. So there's just a lot of it washing around. Now, there's lots of utility of that token, but the price is not designed really to go up from a stable sort of economic system. So there are still games, I think, that the fact that the token price goes down is not a big issue. Because those games are not on exchanges, they have much more control over it, and they can maybe put in extra sinks and sort of suck it up and stuff. As soon as you've got a token that's out on exchanges, you sort of think you're dead.
Yeah. There's a lot of uncertainty, obviously, in the market anyway, so you don't need that extra element of uncertainty. So we've gone through a few of the reasons why we have seen such a bleak year for developers of Web3 games, and funding is going to get worse. So that's another reason, obviously, and that ties into, if you can't build a sustainable economic model, business model, if you can't have any sort of sustainable revenue, then you're not going to get more funding. No one's going to believe. No. So that's going to. I mean, we're getting onto predictions in a different podcast later on.
Are we?
Okay. Oh, I thought so.
For 2026, yes.
Yeah. Well, we can talk a little bit more about sort of future funding sentiment, but talk a little bit about the funding sort of sentiment in 2025, kind of compared to 2024, and how that's affected games and games shutdowns.
I mean, again, I would say, generally the games sector had a massive sort of funding boost in 2021, 2022 with sort of COVID, really accelerated everyone's sales. So everyone's numbers looked great. And then obviously, as people came back to the real world, sort of there was an oversupply of games and user numbers sort of dropped down a lot. The games industry in general has suffered, a lot of sort of structural changes, really post-COVID, in terms of the post-COVID shutdown. In sort of big games, AAA games, there's a continued rise of China, which is very good at making certain types of games and obviously has massive cost advantages. You've got the rise of AI, which is really sort of confusing people, and also you sort of have just a general sort of lots of games companies went on stock exchanges with cheap money, and then they've had to sort of unwind some of those business decisions. So it's been lots of, from a sort of how you make games point of view, which games are still getting more expensive, how you sort of monetize them, and the sort of the cost pressures and the sort of competitive pressures from places like China have really caused I would say like maybe existential is too hard a word, but but maybe to some degree getting existential a little bit about games. So there's been a lot of job losses. A lot of job losses, like 40,000 or something, and companies sort of shutting down and reorganizing. And obviously, there's probably people not desperate to take on tons of new stuff at the moment when they're not sure what's happening with AI, how many people are going to need. Obviously, AI, everyone's using AI for coding, and there's big backlash against people using AI for art at all. I mean, it's a small toxic minority of people as ever, but that's sort of a bit existential. And then people are not quite sure what games to make anymore. I think certainly on the AAA side of things, sort of. Yeah, so there's just generally at the moment, unless you're a really hardcore investor and probably doing small seed funds, you're not looking at games. And partly because AI is clearly in a funding bubble, and not the AI itself, but lots of companies have started up, and we've seen some blockchain games companies sort of flip into AI companies and just leave games at all. Because there's a lot of money there for that early seed sort of round. Quite whether they'll sort of continue. So from games not being something that investors in general are looking at, to AI being something they are really, really looking at, and then the trajectory of blockchain games where basically the tokens have all gone down, hardly any of them have got a proven business model, they're all inexperienced teams anyway. You get funding when you can show you have traction. And blockchain games, because all their audience was basically incentivized in the good times, or they, often you don't really see it anymore, but even at some point, I mean, I think even Axie says this, or Sky Mobius, $4 billion worth of NFT trading in Axie. You're like, yeah, but that was like 2021, 2022. How much in the last year? A few million maybe. So there's just no way anyone's going to, at best what you're going to get really is some of your existing funders will give you like another year of runway to see if you can sort of find your product market fit. So in terms of actual numbers, it's sort of sad to say because I've followed this for so many years. I've almost sort of given up looking at this. I did actually look at it yesterday, maybe because I knew you were doing this. But so this year is coming in at about sort of 330 million, I guess, of funding, which is still quite a large sum. That's more than was in 2020, I think. So it's still not nothing.
But to compare that, actually, I saw a headline this morning. The Swedish company, Lovable, the AI company, they just raised 330 million.
Well, exactly.
And that just shows
it shows the difference. And like last year, it was like 1 billion. The year before that was 1.7 billion, and then check my notes. The year before that, it peaked at 5.3 billion. So we're sort of, we're down, 95% from the peak year, and that's, I would say at the moment that's sort of second, in a sense, it's sort of secondary. That's not like, oh no, there's no more money. I mean, that follows the trend that we've been discussing, that most games haven't even found like 1,000 people who will pay $10 to play their game. I mean, it's just so it's nothing.
Or they do only if they know they're going to get a reward.
Yeah, no, exactly. So that doesn't, and the other thing about funding is to get you to a place where you are sort of self-sustainable. And I think if blockchain games companies could show that they are, close to break even, but just need more marketing, or they can even show not even that they're breaking even, but they're raising this amount of revenue. And if we, because they're normally quite small, if we 10x our audience, we've been quite profitable. Probably those companies could get funded because it doesn't really matter what their business. It doesn't matter their business is sort of blockchain games. I mean, you probably can't go to a bank and do it, but if you just basically go, these are the nuts and bolts of this is our costs, this is how much we're doing in revenue. We've been increasing our marketing by 10% every month, and our sales will be going up by 20% every month. And this is what you can get that off. There are obviously still people in crypto with tons of money. So it's the fact that the basic business model now needs to be shown, and that's why there's no funding.
Well, it's definitely been a stronger emphasis with changing player behavior, and this is kind of gaming in general, really. To go back to what you said before, kind of understanding your players and understanding your audience. That's something that Web2 game developers sort of struggle with as well, and how to crack that. But in Web3, Web3 gaming, that's even more important because you have to understand spending and rewards to get that balance right. You have to understand when are players actually incentivized to spend so that we get money back into the ecosystem. Yeah. And in that regard, Pixels is one of the sort of strong standout teams, you'd say, in starting to understand, and they're talking about this our rewards on spend return
on reward spend, isn't it?
Yeah, that's right, RS. So that's kind of hopeful. Moving on to sort of, now we talked about a lot of the games struggling and shutting down, and don't really need to go into mentioning names there, I don't think. But let's talk about the more positive games that are still out there and that are kind of getting it to work, seemingly, anyway. Well, and what's interesting there, again, about kind of understanding your players is this almost divide we've seen in are you building for crypto gamers?
Yeah.
Or should you not build for crypto gamers at all? The only way to be a successful Web3 game is to build for Web2 gamers. So can you mention some examples there?
Yeah, I think you're exactly right. I mean, this did come to the fore. So we're doing, on Blockchain Gamer, we're doing our end of year sort of questions that we sent out to sort of, sort of some of what we think are the smarter people, actually on Maven's group, who regularly sort of give commentary, and some of those other smarter people. What's been interesting is yesterday it's Wednesday and Thursday, wasn't it? So we got Luke Barkowski, who runs Pixels, and just a really good, thoughtful person and sort of into iterative design, sort of game designer. He come out of a Silicon Valley sort of setup. So he's not sort of wedded to a certain game design idea for Pixels. I mean, Pixels is very light on the game side, but he's doubled down on, he believes play to earn as a sort of concept is going to work. And so he's got the Pixels game, and they've made a lot of changes to that. But they're launching this new thing called Stacked, which is basically a rewards app, which is designed for Web 2 people. It's all blockchain, it's all crypto under the surface, but you can get Web 2 rewards or get Web 3 rewards, and they've been doing a lot of testing on that. I mean, it's still the case that, I think there's a long way to go to get these things to scale. So, I'm not saying it's going to be a success by any means. Some of the stuff they've tried, I don't think has worked this year, like the staking for Pixels sort of worked, but also sort of didn't. But he's very, his headline is, you can't make play to earn, at least is his concept of it, will only work as a sort of a mass market audience. And we know that crypto is not a mass market audience. The crypto gamers, at least, are not a mass market audience. So his point of view is we have to make a product that probably doesn't mention crypto, has all the stuff in the background, but it uses the superpowers of blockchain and crypto in terms of payments and routing stuff around and not having to use PayPal accounts and not having to spend 3% on Visa transaction fees. And we built this out, and this is what we're looking to do. So that app isn't live yet, the Stacked app. So we'll sort of wait and see a little bit in 2026 how that works. But that's his vision. With Pixels, there are 2 million players at one point through sort of Ronin and all the guilds and everything. It was a lot of bots. Yeah, it was a little bit like Axie Infinity, sort of Mark II. More sophisticated. But it was very much relying on the Ronin ecosystem. But they just worked out it was as you say, what they're looking to do is, if we give people rewards, what do they do with those rewards? And obviously, if you give people even $2, 99% of them go, I'll have that $2 out of your made up internet money, and I'll have that in USDC or Bitcoin or cash it out. So, they had 2 million people playing it, but they weren't making any money. They were basically giving out loads of rewards, and the revenue they got back was less than the rewards they were giving out. So, this doesn't really work. So, they've dropped their daily active user base by 90%, but they feel like now they're finding the people who they give rewards to, who spend those in the game, and maybe not all of them, but maybe some of them also then bring some of their own money into the game because they're like, I like this game, they're giving me free stuff. There's a sort of it's sort of, as we started out, it's sort of solving that psychological sort of question of, you're enjoying the game and you're prepared to put money into the game. You don't really worry too much about what the value of the stuff you're putting in the game, but you just like the game.
Because you're getting enough value in the experience of the game.
Exactly. So that's what he's been working on. I've been working on it with Pixels and Pixel Dungeons, that sort of other game, and other things they're doing as well. So that's sort of really interesting. He's like, the crypto people just want money. Lots of other people also want rewards. So you can do the stuff like giving them PlayStations and stuff like that, in raffles and things. But that's what we want to build on. Interestingly, YGG, Yield Guild Games, who started off as like the play to earn, used the term play to earn, sort of. Gabby was maybe not invented it, but he certainly popularized it, and obviously popularized Axie Infinity. So basically, Axie Infinity was a small game until Gabby, who we knew those guys well, started onboarding all these Philippine people into the game who started earning money, and that was when the whole thing sort of took off. So he's had a long history of working at a sort of mass scale, and he's just like, had the same thing as sort of Luke on Pixels to some degree. Like, it just doesn't work. It's a massive overhead to manage all these people, and you can't find a game because they haven't got any money. The people weren't buying Axies. It was YGG had the Axies as assets, and then it was like lending them out to people to play the games, and the people were then earning the tokens and selling it off. So he's seen that sort of scale, and they've just given up with that entirely. Partly because the token price of all these games has collapsed. So they've now started making their own games or partnering with other people. And they're basically like, the only way you can get crypto games to work is to focus on crypto people. So their whole thing is Casual Degen games. So the games are super simple. I mean, like, effectively, like, Monopoly Go or the Lolland game is, you basically hit a button and your thing moves. It's a one-arm bandit, effectively. But you can get these big payouts. So they've done, I can't remember, like $4 or $5 million of people putting money in. Obviously, like most gambling assets, you just pay out less than the people put in, but some people will get big wins, and he's, again, how sustainable, how big is that audience size? The thing for crypto is if you can get the whales who have millions of dollars just sitting there from, the Ethereum ICO or whatever, and you can fulfill a little, thing they want, then you don't need a lot of them. If you can get the 100 billionaires of crypto playing your game, that's fine. It's the volume of what they're putting in, not how many of them there are. That's the other thing with crypto. Bizarrely, I think both visions can be correct because the products are very different. What you don't want is to have the idea of
trying to please both at the same time.
We're going to go mass market. If Gabby was like, we're doing Casual Degen games, so we're going to focus on casual players. No, it's casual. He's focusing on degens, whereas Luke is. If it's not so, I wouldn't say he's a degen thing, but Luke is like, we're making a reward system for everyone, and the fact it's got blockchain in the background. Yeah, so you have to have an alignment of vision and product.
Because you're just going to end up getting your audience very angry if you go with Pixels and you go in there as a shark and a whale and think you're gonna make money.
So I think and the failure of the games we've seen in 2024, 2025 have basically been unthinking product, badly defined products with badly defined who are basically marketing to degens who want the price to go up, and they've not been those games wanted. Oh yeah, we'd attract the next billion people to blockchain, to crypto, whatever. The product wasn't good enough on a gaming side to attract a mass market audience, and there weren't enough degens. They weren't the reward structure wasn't focused enough on degens to attract the degens. So you basically annoyed both sides of the audience. And the games you have seen, as everyone points out now, it is stuff like Gigaverse and Fishing Frenzy to a degree, and what's the other one? Cambria. It's like a risk to earn is another phrase, like Degen Casual. And that's because they're very simple games from very small teams, often like fully on chain, so quite complicated to get into. You need, I think on Cambria they said I can't remember the figures now, but like an enormous amount of volume had gone in from about like 10 wallets or something. It's a very small number of wallets. If you can capture those people with something, then you can do very well out of it. But you can't. Those games are not scalable. So yeah,
it's basically people with a lot of money that are seeking thrills, and that brings us on to prediction markets. I suppose you wanted to talk a little bit about how that kind of come into gaming, or
I just think, general. So prediction markets have obviously been around for a long, long time on the internet. There's always been US legislation around them because often they've been around sports stuff, and there's been, the US regulation around sports betting, which only disappeared fairly recently, actually. And I love prediction markets, personally. Intellectually, I really like them. I actually, maybe it's like we should have a Grinch hat on that. At this stage, I think prediction markets are a little bit overblown. Obviously, prediction markets had a massive blow up with the US election last year and sort of Trump's surprise victory, I guess, or lots of narrative in that, Biden dropping out. And so that sort of stuff, big world events happening that no one's really sure about. Prediction markets are great for, is Biden going to drop out? If Biden drops out, who's going to go in? Who's going to win? But, so you had massive influx of just interest in those sort of things. But, now people are saying, actually Coinbase yesterday, when they announced they're integrating a prediction market in their app. And they're sort of like, the thing for prediction markets is, sort of monetize they don't say monetize your opinions, but, bet on your opinions, or your opinions, you get the value of your opinions or something like that.
Which actually, sorry to interrupt you, is a little bit what the Sandbox is trying with its kind of monetizing sentiments and
it's all yeah. I mean, this trend is sort of everywhere now. So and I've used. Prediction markets has been around in crypto for a long time, and actually, there's a few people, Robin Han, who's part of this sort of Tyler Cowen circle. He's been banging on for ages, and Vitalik, he's always gone about predicting markets for years and years and years. Mm-hmm. So there's been some very, clever people who've thought quite deeply around why prediction markets matter. And again, it is interesting that for certain events, to actually financialize those things can actually be quite valuable. Is that the door? That's prediction markets. So prediction markets can be very valuable in a sense. If they get big enough, you can hedge against events. So hedging is basically making a bet on a future event, or normally the price of a future asset. So farmers would hedge the price of wheat or something. If might go, particularly if they thought the price of wheat might go down. So you sort of have this sort of long tradition around sort of futures, and prediction markets are part of that. I guess I would argue that the issue at the moment is prediction markets are sort of, not every opinion you have is sort of valuable. And so you have with this explosion of prediction.
That's something you might need to learn yourself.
Ooh, bitter. Brutal. Is it salty? No, I don't know what the term is.
Coffee.
So if you look at Poly Market, it has just a lot of just super random sort of stuff, and some of it's interesting. Some of the stuff stuff I like. When I had a prediction market up on a non-crypto one for ages, who's going to die first? Was it Biden or Putin or something like that? Stuff like that. That's sort of more fun, sort of nuanced. I think you can do some quite interesting stuff around that. But a lot of this stuff is now basically sports betting. So basically, we have. It's not like we need another opportunity to do sports. But, sports betting, certainly in the UK, is pretty widespread. There's tons of apps if you want to do sports betting. You don't need prediction markets to do that. A bit different in America, really. And then you get sort of, quite trivial ones like, or maybe it's seen from me, what's the price of Bitcoin going to be tomorrow or the next day? And that's sort of financialization, but it's not, it's not really, consumer-facing prediction markets. So I think prediction markets can be very for entertainment, and also for one of the things about prediction markets is sort of like the wisdom of crowds. Any one person may have an opinion, but if you put like 100 people who have an IQ of 100 together, you get a better result than asking the person or an IQ of 130. It doesn't matter what the IQ is. The more people you put into the system, the better the answer becomes. So they are interesting from that point of view, but I just kind of think there's a particular type of person who really sort of likes them, and that particular person is a person like me. And most people have discovered are not like me. So they've just become a sort of quasi gambling sort of setup. And I wouldn't be surprised, probably not under Trump, but I would be surprised if basically they're going to get legislated against, and there's going to be sort of rules about actually what you do. Because at the moment it's a bit of sort of just an awash of triviality and some interesting stuff in there as well, and they're just sort of everywhere. And the other thing is, you basically want to have as much liquidity in these things as possible. So even on, say, Poly Market, you might have 3 or 4 very similar predictions, to maybe slightly different days or something. Sometimes you actually just want someone to go, maybe here's just one market. I don't know.
So back to games then.
Back to games,
okay. So for lessons kind of learned in 2025 that we've been talking about, it's kind of that we developers need to understand their players. And then we've seen this kind of division that developers kind of need to know, are you going to build for Web3 rails, kind of the gens, or are you going to try and kind of hit the Web2 kind of gamers to go more mainstream? And then we have this sort of third branch, which maybe you'd call it, with kind of games kind of trying to go into ecosystems and build kind of more into the UGC side of things, kind of underpinned more by a coin or a token, and to get it to work that way. So talk a little bit about that trend in 2025 and what we've seen of kind of particular projects.
Yeah, so I guess the obvious one here is MapleStory Universe. So MapleStory is from Nexon, very well funded. It's sort of as a separate subsidiary, or quite how you describe it. They're a bit careful about how you want to describe them. Anyway, Nextpace are based in Abu Dhabi, and that's the Web3 arm of Nexon. And they 15th of May, they launched MapleStory N, the PC MMORPG based on the very famous MapleStory IP. So that's the biggest game launch of the year, I would say. It's got up to, I would say it's been fairly successful, but the metrics are a little bit conflicting. It's got up to about 70,000 daily active unique wallets, had about probably over 2 million accounts made. A whole bunch of those have been bots. So it's actually been quite active about talking about getting rid of bots. That's a clear thing for it. Token price, obviously they went on exchanges, so token price, like everything else, has gone down massively. So that's a bad thing for them. So the game itself seems pretty solid, and it seems like some people who play MapleStory are also playing that. It is quite crypto heavy in the sense that you have to play through MetaMask, I think. I mean, It's not officially available in the UK still, so I've only played it, sort of dabbled with it. But certainly when it launched, you had to go through, a crypto wallet. Actually, in our end of year questions again, the CEO was basically talking about invisible blockchain. So he's very much like, we are making a game for Web2 people. So he's very much of the opinion that let's get rid of all the blockchain stuff. So not using MetaMask, basically doing what Mythical Games do. Basically, anyone who downloads one of their games and logs into it, a wallet gets created from the background. And that's not anything new really, but infrastructure is getting much better. So he's very much on the let's make it invisible for everyone. Let's use sort of blockchain as so they sort of have their token is NXPC, which is their live sort of blockchain token. They also have an in-game one sort of version of that called Nesso. So they sort of have both, although the Nesso price is basically attached to the MPXC. But the wider thing, and they've always been focused on this, even when MapleStory N launched, and that's clearly what's driving people in, is they want to have an ecosystem. So they want to have like open APIs and sort of open source stuff, so people can build initially like trading apps or utility apps or different dashboards. The information is obviously a whole bunch of it's on the blockchain, and a whole bunch of it they can just make available for people. So you can build these utilities if you wanted to. You could build your own RPG based on those characters doing something graphically different or doing something, thematically different. I don't quite know why you would do that, but it's more interesting to do something, a Tamagotchi game based on those characters or something, or I don't know, a version of The Sims using those characters. So that's their long-term plan. Is they build like the core experience, has all these assets in it, which in this case is characters and gear. But then in time, other people can build maybe NFTs that are not different things that may not work. You could make it up now. You could invent pets. Pets would not be supported in the main MapleStory N game unless they got really popular. But why would you have pets? That would sort of break their gameplay. But people could make a cozy RPG where you can have tons of pets and breed them or something, and that would use some of the assets from MapleStory. They've been created from MapleStory, but in MapleStory farming or something, whatever. So that's their long-term plan. Obviously, that's really hard to do. Really hard to get people doing that. They've announced a $50 million fund to do that. It's not quite clear if that money is just in their token or whatever. But that's their big goal for next year, is basically build an ecosystem where there's basically a starting pack of, there's a game you can play, but then you can build your own experiences around that. And then that obviously is driving new players in who some people might not like the sort of action RPG of MapleStory. They might like the cozy pet game. So that's a decade-long sort of project, or certainly 5-year-long project. So is that, I guess, the purer example is EVE Frontier from CCP. I mean, that game is gone through its 4th cycle. So basically every 3 months it has a cycle, and it adds new features in there. And at the end of the cycle, basically the universe is nuked and everyone starts off from nothing again. You get some points carry over, but all the assets in the universe are basically you do a hard fork of their blockchain effectively. And because that's a fully on-chain game and fully open source dev tools, their idea is anyone who wants to build has the same access as the CCP team building the game. I don't think they're quite there yet, but that's their long-term plan. For them, blockchain is just a way of getting to this goal, which is what they wanted to do for their main EVE Online game, which has been running for 20 years. But if you don't use blockchain, it's really, 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 really difficult to do. Whereas with blockchain, you have a permissionless system where everything is sort of, no one, the code is the law, as everyone all likes to say. So there's no sort of backdoors, there's no like cheat codes, there's no, I can make 100 of these very special, and everyone's got the same minting abilities and blah, 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 blah. So that's their long-term plan. And, again, we had Hilmar, the CEO, giving his end-of-year interview, which I thought was, again, really good. And he's very bullish on it.
Very good,
he's very smart, clearly. And he's been working on these games for 20 years. And he's not a crypto dude by any means. Again, it's interesting how their token will be. I don't know. They're not got close to that stage of saying how the token will be. But I imagine it will be sort of bottom up from created in the game. It may end up on exchanges, but at least they've started with with sort of people spending just their time, and you have to buy an account to get into the game. So you already know people are loving this enough to spend their own money, and if you get a little bit of tokens from doing that, I think that's clearly smart enough not to put it on exchanges. I wouldn't be surprised if they're using app token, although they on Sui, so I don't think you use app token on Sui. Anyway, so these are sort of products, and again, my Soccerverse hat on. Soccerverse is a fully on-chain game that's moving to open source and already has people building little apps and utilities and stuff to see what's going on with all the assets in the game and which are the best players to buy for return on investment, all that sort of stuff. I mean, it's a very different game. You're not going to it doesn't really have NFTs in that way. You're not going to make a RPG based on Soccerverse. I mean, you probably could, but that's not. But I think, again, the long term for blockchain games, because they are by default permissionless, open source, at least on the blockchain side of things, they just allow that sort of modding sort of situation, which has all been part of PC games. But you get that for sort of, unless you make some stupid decisions, you get that for free in blockchain. So again, that's a very long-term, say, sort of 5-year, 10-year sort of process. But the best blockchain games will end up being these sort of quite sprawling ecosystems.
Yeah. So you mentioned a couple of the names we've had featured in our end-of-year series there on Blockchain Game Biz. Obviously, another one we're going to have is Robbie Young from Animoca Brands, who stepped up as CEO of the Sandbox this year. We do think Animoca is quite a significant company when it comes to Web3 and Web3 gaming. So let's just touch on that before we kind of end. We're not going to go too much into prediction. Yeah. They've had a big year.
Yes, no, it's good. We'll end on that. I in my notes put in the future, but also we can do that in predictions, aren't we? So I won't go into that in too much detail. So the Sandbox had Sandbox is a well-known product, been around for as long as Blockchain Games has. I won't rehash all my criticisms of it, but it's struggled like everything else. And it's interesting. We talked about sort of stablecoins, prediction markets, meme coins, that sort of thing. And they basically, they're still building out the normal sort of Sandbox platform. They're doing this other thing called Corners, which we discussed 2 weeks ago. So I won't go into all that again. But it's sort of interesting that it does show blockchain game projects have a sort of flexibility. So the reason that Sandbox is doing this is because its Sand token is widely distributed on exchanges. It's down. The price is massively down from its height. Lots of people have this. This Sand token is quite easy to get hold of. So they're looking to sort of leverage that, and maybe I wouldn't be surprised if they just give up on the blockchain on the main platform, and just if they're successful in these more community type things, because that's what they were talking. It's a community based thing. So, and just to end up, I mean, I think Animoca as this sort of big sort of conglomerate of projects and investments. And the big news from it this year was it was reverse listing, or will reverse list, hopefully, on the NASDAQ next year by reversing into a company. So probably get more details of that start of next year. But it's sort of Mocha Network has also announced a bunch of stuff, and they've done their new Mocha proof thing, and it's all sort of moving in the same direction. So it's interesting that they were much more focused on games even like 2 years ago, and definitely they're not focused on games anymore. And most of its games projects have sort of struggled, but it's sort of finding its way through maybe a more entertainment lens and sort of an identity system and entertainment and community. And maybe through that it's sort of an example of what happens to a lot of things that started off as blockchain games, because we don't really know what a successful blockchain game looks like. You end up with actually something that is a bit more community, rather than a pure game with gameplay, or it ends up a bit. They're not doing prediction markets from that point of view, but it ends up something that sort of uses the more fundamental bits of blockchain, which is what I guess has underpinned this entire discussion. These things about decentralized permissionless systems that have value integrated into them. What can you do with that? And I guess you would say the last sort of 10 years or whatever, but certainly the last 5 years, people who like games thought the games we used to play that was what would encapsulate it.
Mm-mm. And maybe then kind of a company that really, what would you say, kind of characterizes 2025 and the trends of this year would be Mighty Bear Games.
Yeah.
Former Mighty Bear Games, I should say, because they rebranded recently to Wearemighty. That might not seem significant, but actually with that rebrand, they've dropped games out of their kind of company name. Does that sort of tell you anything?
Yeah. And I know sort of Simon Davis is the CEO fairly well. I had him on the podcast a couple of times. So there's someone that sort of have that degree of personal interest in. And it was they very much started out as we are making a battle royale game on the blockchain called Mighty Action Heroes, and they'd made games like that before for mobile, so they knew exactly how to make the game. In it's a top-down sort of cartoon, battle royale. It worked fine. Played it a little bit, had NFTs and rewards and stuff like that. But they sort of found, like with everything, it's sort of hard to get that. What was their audience? It wasn't degens, it wasn't mass market, a bit in the middle. And they went from various blockchains to various blockchains. They went through about 3 different blockchains, and then they ended up going, right, it's actually degens we're after, and they made it into like a wagering system, like a very I'm playing, me and you get dropped into a very simple match. We both put in 10 tokens. The winner gets 15 tokens. That's the standard thing you do in these wagering things. But then they came up with the sort of idea: we both put in 10 tokens, but on a random basis, the winner might win 100 tokens. Or that's the degen sort of stuff where you're risking, but the reward is much bigger. That worked really well. They could see on the metrics. Then they started making loads of games like that where you could play, this sort of thing. So that became then Goat Gaming, which then this time last year they were playing into that and the AI agent stuff that blew up. We have not really mentioned this at all this year. It's totally gone away really in games, bubbling under the surface, but nothing happened in 2025. So they did this thing, Goat Gaming. They had this, what was there? Amy was there, agent, I think. You could play against her. And then they had this NFT you could have that was going to be an agent and play for you and win these tokens. Token things totally collapsed. So now they've ended up with something called Gift Fund, which is basically a sort of pure degen sort of gambling sort of asset on Ton. And the other thing was they moved to the Ton blockchain using Telegram, and that's sort of quite interesting when you look at them. Certainly 2 years ago, they were quite a traditional blockchain games company, making one of the better blockchain games, and now they've ended up basically a gambling dopamine hit company, running on blockchain still, and they've correctly realised that being called Mighty Bear Games they're not that anymore. They position themselves as an AI focused entertainment company. So I mean, personally, I don't the concatenation. So they're called Wearemighty, all one word, no gaps. It's just quite difficult to sort of with your eyes to sort of pass it.
But they're very transparent. It's sort of similar to kind of the labs, the South Korean kind of game, Web3 game developer, the labs games. Very open with, we're trying this, might not work, we're pivoting again. Immutable, then kind of a final before we run out of time. They have also made quite significant changes. They don't really frame it that way. They don't say we are pivoting or we are changing direction, but they clearly.
So it's quickly, So Immutable, obviously, its own blockchain. Was for a long time was Immutable versus Polygon. Then we sort of had it as Immutable versus Ronin, I suppose, last year. That was sort of how we sort of
the kind of
narrative. When Ronin had all these games going live on it. I mean, Ronin we won't go into that now, but Ronin as an active blockchain declined a lot this year. Still cool stuff on there, but headline stuff declined. And we always used to joke that Immutable will always go about how many millions of games they had, or hundreds of games they had. It peaked about 650, wasn't it? I think that was
something like that.
And then they stopped the narrative because, in my opinion, all those games were rubbish. I mean, there were very few games that were any good. So they had 650 bad blockchain games.
That's a marketing slogan for you.
That's why I'm head of marketing at Immutable. So they gave up on that because obviously, it just clearly you just add more numbers in it. The token price was going down, not their fault. Everything else was going down. And actually, it does encapsulate again this sort of: are you doing a hardcore crypto game for crypto degens, or are you a mass market platform that has blockchain in there? Immutable was never a hardcore. Immutable was never a degen focus. It never had those projects on it. It had not very well made, in general, I'm saying, but not very well made traditional games with some blockchain elements in them. And it's basically what they had. Some of the games were better than others, but generally, people were trying to make traditional games in traditional genres with NFTs. That was what they're trying to do. Whereas that hasn't worked. So good, they've changed it, but now they sort of are calling themselves because they launched this thing called Immutable Play, and that was where you've been collecting all these gems for a year. And what did the gems do? The gems were you could buy a key, and you powered up your key by doing things in Immutable Games, which actually may just be following them on Twitter and retweeting stuff. But you interacted with the Immutable ecosystem, and you earned sort of points, and that powered up your key, and then your key gave you rewards. And actually, remember, I got the video just looking at it. The first key activation, I got $30 of Immutable token. So that was pretty good. I was pretty happy with that. And then over time, it went down and down and down. And now you don't really get anything at all.
Well, in talking of that, they've shifted focus really from going, we got 680 games to we onboarded 5 million users to Immutable Play in 18 months. That's the kind of big number they are throwing out now. But how many of those 5 million?
No, but we'll find out because now what they've done, we shouldn't be too lean on them. I mean, again, they've realised what they were doing hasn't worked. And now what they're doing is we are a marketing platform for Web2 and Web3 games. And obviously they've got this deal with Ubisoft, a couple of games that are coming out. It's coming out, Might and Magic, Fate, is that coming out soon still? And actually as a marketing platform, it is fairly sophisticated. I mean, it's not something that interests me, going back to if I have to spend 20 hours playing a game to get $10 and I hate the game, doesn't bother me. You're not going to do it. But for other people, that the rewards it gives, it now it has the crypto side of it still, but now it has this big spin wheel and you can win a PlayStation 5. You have to press it a million times, but someone presumably does win these things. So they have sort of leveraged the scale that they have built. I mean, how the quality of that scale of audience would obviously be the open question, but they're now leveraging what they have built with sort of crypto and then saying we can bring you these players. I mean, obviously, again, you can have 8 billion people sign up to your system, but if only 10 of them play games, it's not going to scale, is it? But, so we'll see sort of quite clearly again. But it is I think the products that are really dead are the ones that are just sort of ploughing ahead, unless they've made their choice about degens or mass market this year. The ones who were just sort of we're doing this exactly the same last year as we did.
As we tried 2019.
2026 strategy is exactly the same as our 2025 strategy, but we're using ChatGPT to write our docs. That strategy, is not going to work. So you have to, if it's not working, you have to go one way or the other. So I think what Immutable has done is exactly logical, in the same way I think of what Mythical Games have done is exactly logical. I guess it's an interesting question would be if they could look back, if they could see when they started out what they'd end up doing, would they go, that's what we want to end up doing, or do they end up doing what they feel they have to do? I guess that's the sort of the
no, you have, yeah, exactly.
Question.
It's kind of balancing that, having some sort of North Star, but equally being adaptive to market changes. And...
Yeah, but I do think it is I think a good way to end on, because it is quite representative of how the games, the projects that are heading into 2026 are the ones who have been thoughtful and flexible. We're not saying what those outcomes will be because we don't know that. They don't know that. Or maybe they do, bit of information, but we don't know that yet. And the one rule of business is don't make decisions that kill your company. So if they're still alive now, then they get another chance to bat, and they're not stupid people. Probably those companies still have money left. There is quite a bit, so it's not like last roll of the dice. And we've seen for all the standard blockchain games that did the last roll of the dice, and there's sad stories. Maybe we should end on this sort of, not being in the company sort of shut down, but you can imagine, these companies, it just seemed like when they talk about it, we tried everything, and we worked without funding, or the founder put in more money to give us an extra month, or we thought we had this reading one, we thought we had this great deal, and the investor walked away. You don't know how true it is, but these things do not come without human cost. Obviously, the people who are laid off, they haven't got a job, they've got to find a job. You don't walk into a job in the month you lost a job often, so it's difficult for people. And just the emotional, sort of trauma of sleepless nights and stuff. It's not nice. It's not something. It's very easy from a sort of business point of view to go, well, some people are not making a name. The games have got culled and will be better for it. Well, yes, maybe in the long term, but there is a emotional, damage that comes from that. So we can't just brush over that and just say sort of what they call it, a pooterish sort of view of history, Whiggish view of history. That's always up and to the right. It's not. For a lot of people, it's a lot of people fall by the wayside. But that's how we learn, and that's how you learn what works. I think, and that's the positive.
And maybe that's when you also realise that and you learn to be more flexible in those sort of circumstances, and that can open new opportunities. But those new opportunities and the companies that are thoughtful and flexible and have got that recipe right, we'll be talking about probably in our prediction episode, because those are sort of the companies that are still hanging around and are still relevant. I can a few spring to mind, like Proof. Let's not mention them now.
Well, it's not.
So thank you for tuning in, and we hope to catch you in our prediction episode for 2026.
And Merry Christmas.
And Merry Christmas. Happy holidays, and wherever you are in the world. Thank you.